Good afternoon, traders. This is Christian from Hertz Traffic Trade Group, and this is your end of day market recap for Tuesday, March 5th. Oh boy, do we have some things to talk about in today's trading session regarding today's trading session. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going to talk about today, of course, is for information purposes only. So I want to kind of cover maybe three different concepts in today's video. Number one, just kind of talking about, if you got caught in some trades today, or if you gave back more than you wanted to from, previous days' gains. I'll kind of just go through a little bit of things that might be a little bit helpful to try to help you a little bit more. These are things that really try to hold traders' hands a little bit during the day. I provide a lot of audio clips on what I'm thinking and what I'm doing with my portfolio and so on and so forth. And then number two, we'll kind of talk about the positives, I think, of the day. So if you manage to kind of get through today and not get too hit by the volatility, I view sometimes these days as more positive than anything else. Because we were due for a bit of a pullback. So and then number three, we'll talk about some charts. We'll talk about some charts to watch. So where to start? So that said, with those three things, first thing I'll do is kind of just go through the themes of the day, a couple of things that stood out to me, and then we will go over the index charts. But TLT, and I need to update this because I put this out in my midday note, which is on Substack. But I was talking about how, like, for the most, till about this afternoon, like, things were holding in there, I thought, pretty good for the most part. And just, I thought there was just a lot of rotation on the tape. And sometimes that's spurred by what interest rates are doing. Sometimes it's, something else that's going on too. Sometimes we have events like, I think Powell testifying for 2 days in front of Congress, maybe just, gives people reason to basically say, hey, I'm really going to take some profits and take some risk off the tape because we don't know what Powell's going to say tomorrow. Do I think he's going to say anything damaging personally? No, I don't. But we've been on such a big run that the market gets almost priced to perfection, and people want to take some profits because the market has gone up so much so fast. The dollar today wasn't really an issue. It hasn't really been much of an issue. And the VIX, and again, need to change this from where it was, but the VIX ended up 7% today. But, if you look at the overall level on the VIX, it's like 14 and a half. So it's not a very high level overall, but we're coming from such a low level. The VIX got to like a 13 and a half again, which is just very low, and a lot of complacency. There's a lot of people who are tweeting out different measures about sentiment and about how really kind of, the market got over the tips of its skis in terms of, how hot sentiment was. So these types of shakeouts are pretty good actually for the market, because it kind of resets things and pulls back some of that overheated sentiment or expectations for the market. But take a look at what was happening here today with those big green areas of the market. The banks were up 4%, the regional banks. So, and then if you look at the worst performers, you have to scroll down there. Sorry, I have the spreadsheet cut off here for you. Oh, it was almost right, but yeah, I probably just need to zoom out a little bit for you. So that you could see that appropriately. It's still not giving me what I want to see here. Why won't it go up to the top here? Yeah, this looks like it was stuck. User error, most likely. But if you look at the names that underperformed, like software, for example, I thought that software might be a problem area. After Palo Alto reported, a lot of things went below their 50-day moving average, and then they bounced right back. But if you look at the software ETF, and I guess that's where I'll start off first, and then we'll go through the indices. But we'll see if CrowdStrike can kind of really help the cause here. But this isn't a very good look, in my opinion, and because we made a high back here on was this February the 12th, I think. And then we made a lower high, and this is I believe after a couple of days after Nvidia reported, right? And then we kind of have been moving back down here and back below the 50-day moving average. So that's a big no-no for me. And is this troublesome or is it worrisome? I don't think so. I just think that the software group has been on a really big run, right? And what happens after Aries have been on a big run like this is they're going to consolidate, and they're going to go sideways a little bit, right? Shake people out a little bit because there's going to be people who take profits, right? This is also not a very cheap area of the market. There's a lot of names that have gotten quite expensive. So to me, it's not a big problem. I guess it's a really big problem if you're really long this group. But I think if you kind of saw the writing on the wall a little bit, and you got your kind of get out of jail free card, after this move back above the 50-day moving average, but it didn't reclaim, so look at the difference for now between the software group, right, IGV, and look at the difference between the semi group, and that might help a little bit, right? Notice what the semis did, right? They had a more shallow pullback, right? And then they broke out to new highs. Now, again, like this even looks like an extreme move to me. But the point that I'm trying to make here is that a lot of areas went out, and even the Qs, which had a tough day today. Look at how much stronger they have been versus the software group. All right. So again, even with a decent down day in the Qs, that's all that I'm trying to reference is that something just didn't feel right with the semiconductors. So not the semiconductors, with the software names. So these are the little hints that if you go through and look at charts objectively, you might have been able to tell that something was a bit amiss with the software group. And, perhaps it just got a little bit overcrowded. Possibly some of the move today could have been some, hedge funds. A lot of hedge funds, they operate like what's called long short strategy, where they're long some names and short others, right? Maybe they were short the banks, right? The regional banks and long software names, right? That's a reasonable type trade. Now, when something flips in their model, what would cause that to give them a flip in their model? Perhaps the move in interest rates, right? So that TLT going up 1.4%, basically could say, hey, we were kind of thinking that interest rates were going to continue to rise, and that we would be better off in tech, right? So something like this could cause like a knee-jerk reaction, a little bit of a reversion into the mean. Hence, banks going up, and the regional banks coming up. They've been one of the underperformers, and the softwares in that group of outperformers coming in pretty decently. All right, so that's my little explanation for that. But I think all you needed to know was just looking at the chart of IGV, right? Again, my opinion, and I'll be very honest in terms of what I think helps traders is just to kind of go through the price action objectively one by one. You don't need to know, in my opinion, I see traders getting too dependent on option flow, right? Option flow is great for speculative things, right? Every once in a while, there is someone that knows someone, so not that knows someone that knows something, right? And you'll catch an order that was really clever, right? Somebody positioning in a name that there hasn't been any news on the tape, and they're right, and so on and so forth. But for the majority, right, you could kind of weed out some of that speculative option flow and just basically look at the price action. It's going to tell you everything that you need to know. For the majority, right? It's not going to tell you for those things that when somebody does actually know something that's not on the tape, right? A deal or something like that, right? You're not really going to see that too much in the price action, other than maybe a spike in volume. But for the most part, you're going to get your hints from just going through objectively and taking some observations, right? And that's basically what happened with gold too, right? If you were paying attention to what was happening the last couple of days in gold, look at the volume come up. Right now, sure. Does it help if you're not watching the chart in gold to see like a call buyer in GLD? Yeah, I guess it does. But if you're doing your homework, or if you have someone who's doing the homework for you and saying, hey, there's something different going on here in gold, right? And we caught a nice trade the last couple of days in gold, right? And big volume. So I think that you'll find these things, and usually when gold is going up like this, some can consider it a contrarian indicator that when gold is going up, it's more of a baby of a flight to safety that's going on. All right, so let's get back to a couple of things that I didn't go through all the themes here, but Bitcoin, we could talk a little bit about this. This reminds me, this move in Bitcoin today, which is not, I guess, a full bearish engulfing, but I think at one point Bitcoin was down about 10%. It reminds me that you can't control this price action, on a day-to-day basis, right? Or you can't like things will get stretched in both directions. What you can control is your risk, right? And taking profits into strength, right? And realizing that you're not going to get the tippy top, but staying with the trend until it reverses, right? Having a trailing stop, right? Those are the things that are really going to help you in this market, right? And I mentioned in the beginning of this video that I would give a couple of those hints. Well, I think number one, realizing when something's showing something that you're in is starting to show relative weakness, right? That's number one, right? And you can kind of clear out of some of those, some of that exposure. That's something that I really was adamant about the last couple of weeks. I'm like, hey, I don't want any software names, right? And sometimes you get out of trades that may continue to go up a little bit, right? I cut out of AppLovin last week, right? And it went up a little bit further without me. That's okay. But I really I cleared out of, I was long cyber. And I did get rid of CrowdStrike. I wasn't going to hold CrowdStrike into earnings anyway, but look at the move that some of these made in the last couple of days. So number one, that's important, right? So number two is taking profits into strength, right? IBM had a great day yesterday, which we got long yesterday. Today, by the way, it looks fine, right? You'll notice as we go through some charts that that there wasn't a lot of damage in some of these areas that showed some strength yesterday too. So but taking profits into some names, sometimes I'll if it's a new name for me, like HIMS was yesterday, I took several targets and I took the rest of the trade off today. I had hit my trailing stop, so I got out of it. But I could get back into this now, inside day, right? And that's something that I'll be watching for tomorrow. So that's the name of the game. So if you go, if you look through my trade blotter, which I'm happy to show you on for today, and not everything is perfect in here, right? It's just how it works. And I think you also have to recognize that, in your trading, is that there's no way, as fast as these prices are moving, that you're going to basically be able to make decisions that are perfect. But if you kind of see what I did, like first thing I wanted to do is like get out of my AMD exposure, right? I'm going to go over that chart in just a second, but again, making sure that I'm not giving back any of those profits, right? So I think I had a trailing stop go off around like 202, right? And I'm like, boom, I'll get out of it and I'll reassess, right? And sometimes they come right back up, and I think AMD did that today, but that's okay. I'm making sure that I'm locking in my profits and not giving them back on days like this, right? Because I honestly didn't think that the Qs were going to go down 2% today, right? So you protect your capital, right? And that's what I did, over and over. Here was the trailing stop on balance in the HIMS, and a couple other things too. DFH was a little bit of a loss. I took this one off. I took one target in this one. CPRT, again, I didn't even really need to take off this trade, just protecting, right? Protecting. Same thing with this one, BlackRock. It did go below my cost basis, even though I was reluctant to take this one off because I really like the chart setup, right? Here's BLK. But again, I'm just protecting, right? I'm protecting my profits. I'm not giving back, right? Even though I think I gave back a little bit, but I did take a target in this one yesterday, right? This one, I think I only took one target in this one yesterday. 838, and I got in at 829, and it may be set up for me tomorrow, right? All right, so that's number one. I said I would go over the index charts because I thought that they were interesting. Using the MarketWebs volume at price, right? So let's start with the daily chart here for a minute here in S&P futures, and then we'll talk about what the Qs did today. But as we talked about in yesterday's video, I said that we could see a check back. I didn't think it would happen like the timing of the check back into the top of value. I didn't think that we were all going to get it all in one day, but we did. We got we checked back to the top of the March value area, which is 5059, and also the 20-day moving average, which corresponds here too. So we've got two things to basically watch in terms of support. You'll note that every time that we've done this over the last couple months, where we check back into the 20-day moving average, right, it's been a place of interest, right? And sometimes we do break it. We broke it back in here. In the beginning, I think that's what the beginning of the year, right? And when we got back above, came back again, checked in, checked in, checked in. So for now, it could be another one of those situations where we're just kind of checking back in, and we've got our levels to watch, right? So if I go long a couple trades, right, and the market starts to kind of break that 20-day moving average, let's just take them off, right? And here's the 1-hour chart too. We were talking about the bearish 80% rule. This is when you enter a value area, you establish yourself in it, and then there's an 80% chance that you're going to go from one side to the other. So we did that here. We got to the bottom of value. Bears were rewarded here, but we held, right? And if you're playing reversions and uptrends, right, you have to know where to take the trade off, or at least I hope you do. Right, daily chart. For the Qs, not as clean as the S&P. Now, we did hold the 20-day moving average, but we're still inside the value area, right? And this could see some more, like my thought is, and it's not a prediction, but we might see just more consolidation here in the Qs a bit. I don't know if we pop right back up and go back out to new highs in the Qs. I wouldn't be surprised if we continue to see some type of consolidation. Now, again, I think I said that back in here too, and I was really surprised, right, that we got to new highs on the first of the month. 1-hour chart, this does look similar to what the S&P did. Again, had a longer way to go to get to that bottom of value for the week, but boom, right, found support. Notice again, like the level is not super important, like the exact level is not super important, because more often than not, this type of thing happens where we break it on the 1-hour chart, right? We actually go a bit lower and then we recover it by the bar close, right? Here's IWM, which has kind of been the wild card because it looks a bit different. So back below this 5-period moving average for IWM today. And on the 1-hour chart, it did not complete the bearish. So here it does say bearish 80% rule, right? You could see that on the top right of your screen too, right? And that hasn't exactly been completed yet, right? Not to say that it has to. If it gets back above 205.36, that cancels this out. But for now, that's what we got. All right, so let's go over some single name charts. So again, this is the most suspect one, is the small caps. All right, so let's talk about NVIDIA first. I did throw some NVIDIA back on. I unwound my NVIDIA position yesterday when I started to see a little bit of weakness, but I'm back in a little bit. Not a big trade, but I'm back in it because this doesn't look bad to me on the 1-hour chart. Now, it has not taken out the highs from from just a couple days ago, or from this week actually, right? From yesterday. But overall, it's back above all these short-term moving averages. So I'll give it a chance, right? And I'll know if we start to kind of break the trend of these candles, then I would get out of this, because the valuers aren't going to help us too much on the 1-hour chart because we're so far above. All right, next one, I mentioned I would bring in the AMD chart. Yeah, I probably sold this one on the lows of the day. Still a very profitable trade because I caught the majority of this, a good portion of this move. And let's see. I have more conviction personally in NVIDIA than I do in AMD. So that's why I added that one back today. But everybody's different. You might like AMD more than I do. Overall, I think it acted really well today. SMCI acted really well. It actually went down a little bit further, right, after the S&P announcement that came after Friday, but is kind of holding where it needs to on the 1-hour chart, right? And it's also above the value area too for the month. So you could trade this, you've got a nice level to watch here, which is 1,006, right? That's a level to trade against for SMCI that, again, doesn't look bad. Let me stick with the semiconductors for a second. Taiwan Semi, same thing. right? Would you rather chase it up here, or would you rather get it into a dip versus support? In my opinion, dip versus support. We'll see what it does at 134. I did not add this one. Again, my philosophy at two is to kind of, you don't have to try to catch the bottoms with these things, right? We can watch to see if this in fact holds for tomorrow for confirmation purposes, and then goes from there. COHR, right? We've talked about this one a number of times in the last couple of weeks. Saw some big, so this one, I mentioned call activity. This one did give me a hint, right? And that's why I do pay attention to call activity, right? Somebody was positioning in the January 26 calls, January 2026, those leaps. And I thought that that was a really interesting type positioning that was going on. And I began to look at this one, right, after it pulled back and I think this is where we saw the call positioning, right into here after a little bit of an earnings dip, right, back out to new highs. One other one that I'm going to look at too is Broadcom. I'm staying away from this one for now because it's going to report earnings. I think that will also be an interesting earnings report. But yeah, a bit of a reversal there. Kind of looks like an evening star type pattern. That's the semiconductors. I went over a bunch of other names. Toast is another one that I'm watching, right? Small pullback day. Notice that it is above the value area now for the year, right? That's that big gray block. It's also above the value area for the month, right? That's the other block in here. I'll have to change the coloring so that you can see that a little bit better. ELF, nice, but like decent pullback, nice looking hammer bar, right? And it helps to kind of look at this on the 1 hour bar just to see what it did here, right? It just barely got back into the value area for the week. So I would watch this 199.80 level. Gold we went over. IBM, I think I went over. How about this one? Kava, right? So Kava, you got to still flashing bearish right now on the 1 hour, right? Bearish 80% rule. I have my alert for tomorrow set at 58.20, right? That would be a move back above or out of this value area to cancel the bearish 80% rule. But look at this Kava on the daily chart, right? So I've got my trigger, right? Using the 1 hour. I could get, but look at the nice little neat consolidation, right? What's the guy who used to do the paintings? Can't think of his name, but happy little consolidation right in here, right? Look at how this lives right in here. Happy. All right. All right, I'm joking around because it's been a long day. Then I just thought that look at the difference between these two earnings, these earnings gap names, right? This is Duolingo. Look at how this one has not really been able to too loose in terms of holding the gap versus look at Celsius, right? No pullback today. All right, so very, very strong in Celsius. So I tend to favor the ones that just are not seeing any selling, right? You don't want to see a gap up and everybody take advantage of the gap up and exit, right? That to me is no confidence. So again, I don't have anything on in Duolingo, but you would want to see buyers come right back in. Now, notice this did get filled, this virgin point of control. So I'll keep an eye on it, but not my favorite setup right now. All right, guys, that is it for today's recap. I hope that helped a little bit. Again, just being, understanding that this market was kind of stretched, taking profits a little bit more into the strength, really kind of helped today. And and then you can play more offense, on days like this, which I'll be looking to do more tomorrow because I didn't really do that so much today. Have a great night, everybody. See you tomorrow.